Grindrod operates in 4 divisions, namely freight services, shipping, trading and financial services. It was founded over a century ago by Captain John Edward Grindrod. It recently reported a 25% increase in its first half headline earnings per share, mostly on growth in the freight services division. It has a market cap of 9.3 billion rand, a price to earnings ratio of 14 and a dividend yield of 1.9%. Now this is a bit of a controversial stock out there. The value managers love Grindrod. They've been waiting, holding on to it firmly. It did give a little relief to those value managers that have been up to their eyeballs in the stock when it rallied after the recent results earnings, or the recent earnings release rather. Ian, let's get your thoughts first.
Well, it hasn't done a great deal. If one looks where it is now, it's at around about...
Well, there's the little rally I'm talking about.
I see that. But no, let's say, I'm not being critical there, year to date, the last year, yes, it's up around the high point, but I think it's in a very difficult area. It does depend on world trade. If that is going to pick up, that's fine. But once again, as I mentioned, that Baltic Dry Index, the shipping worldwide, it's pointing to the fact that it being a very difficult marketing area, and I think that's the majority of their business that's going to hold it back.
So that then plays into the fact that Grindrod is going to remain under pressure.
Look, you've got to go back a decade or so to understand what's going on here. In the turn of the century, it was a poorly regarded, Durban-based company of little consequence. Then what it did is it made a couple of really ballsy bets on the shipping market and put some forward orders in for ships in the sort of 2003-04 period when everybody thought that was a ludicrous thing to do. Of course, that paid off in spades. So it rallied right up to 30 Rand a share, taking account for a share split, at which point it was the most successful company on the market. Ivan Clark was winning prizes. His face was on the Sunday Times every week. So all of this added up to it becoming one of the sort of market's darlings. However, understand that it was making money from those shipping contracts and from trading bulk commodities, which is in itself a low margin but potentially profitable business when the going is good. Now, largely
but
since then...
the going is going to get good again, surely, unless it's an all-fall down scenario.
The group decided, look, shucks, after all of that stuff sort of evaporated, now it has to get into the freight services business, which is the logistics game that others like Imperial are already involved in. It's done an excellent job at that. It's bought into all sorts of things, transport businesses. It's got involved in the port business in Maputo. So it's doing an excellent job of making that transition away. And that's what you said in your intro, that's where the better than expected earnings came from. They also picked up Rembrandt Group, Remgro rather, as their new 20% shareholder.
But
so
shouldn't you be following Remgro?
Yes.
Shouldn't you be following, if it's good enough for Remgro, it's good enough for us. There we go. You see, Ian and I are on the same page here.
Yeah, but I don't care what those guys do. I mean, it's only money that they're slinging around.
Sure you don't care what they do.
I mean,
they're good at generating it, though.
I think the problem for me is that it's got too many shareholders who got rich off of their successes in the earlier period, who are sitting around waiting for the share price to get back to 30 Rand a share. I know people personally who are exactly in that situation. So for me, I'm afraid it still makes too much money from those other things, and I just don't think that the margins there are going to get good for another 5 to 7 years. So for me, the transition it's too early in the process. So for me, it's a little expensive at current levels.
A little expensive for you, Ian Cruikshanks, considering Remgro as their backers right now?
Despite that, I think they've got so fragmented. I'm not sure that the management is watching it all the time. No, I would not follow it.
You're getting hate mail from all the value managers out there, as I said, who steeped up to their eyeballs in this one.
Yeah, they love it, of course, because their sense of it is that it was oversold during that period, where it fell literally from nearly 30 round about to, I think the low.
But they're still expecting it to go back to round about 30. That would be their base case, wouldn't it?
Yeah, I suppose so, and I suppose they're looking for a resumption of the sort of earnings norm that they saw before. But my sense is that the opposite is true. In other words, it was too expensive when it was at 30 because people were just euphoric about how much money you were making in shipping. And as we know, ever since the Phoenicians, people have been making and losing fortunes.
Can I ask you a question? Were you backing it at 30 Rand, Mr.
No,
Growth Momentum Investor?
No, we always thought it was a bit of a overcooked
Oh, it was a bit
story.
frothy for you.
Yeah, exactly.
Hot or not? Yeah, not
No,
Grindrod.
not hot. Not for me.
Hot or not?
No, look, I think it's done a lot of right things, and I think in a couple of years' time it'll be more interesting than it is now, but not hot for now.